Just give it a minute here. All right, so 10:01, we'll get started. So again, good morning, everyone, and thank you so much for joining us today. My name is Stacy Davis, and I am the Commercial Real Estate Production Associate here with Clearinghouse CDFI. Today, we're going to take you inside the CDFI loan process from initial inquiry, roofing, and beyond. Some housekeeping, please note, this webinar will be recorded and could be used for future events. If you have any questions or comments during the presentation, please feel free to drop them in the Q&A chat. We also have a few pop-up poll questions throughout the presentation and at the end of the presentation, and we encourage you to engage with these questions. Our goal is to provide transparency around how we evaluate opportunities, what borrowers can expect, and how community development financing differs from traditional lending. Whether you are a developer, broker, nonprofit leader, business owner, faith-based organization, or community stakeholder, today's presentation is designed to help you better understand Clearinghouse's lending approach and how we use capital to strengthen our communities. At Clearinghouse CDFI, we believe financing should do more than close transactions. Financing should create opportunity. It should preserve affordable housing, support small businesses, expand healthcare access, revitalize neighborhoods, create jobs, and improve quality of life. That philosophy is at the heart of our mission and aligns directly with the values reflected in the B Corporation movement, using business as a force of good. Today, we'll cover who Clearinghouse CDFI is, our impact across the country, what projects we finance, what makes our lending approach different, the complete loan process, and some real-world examples, best practices for submitting successful opportunities, questions and answers at the end. So if everybody is ready, grab your pencil, your drink, your coffee, or your water, and let's begin. So before we discuss our loan products and process, I'd like to spend a few minutes discussing what a community development financial institution, or a CDFI, actually is. Many people are familiar with traditional banks and commercial lenders, but fewer understand the important role CDFIs play in the financial ecosystem. A community development financial institution is a mission-driven financial organization certified by the U.S. Department of Treasury. CDFIs were created to increase access to responsible, affordable capital in communities that have historically experienced barriers to financing. These barriers may exist because of geography, income levels, economic conditions, lack of investment, or unique project characteristics that do not fit neatly into, within conventional lending models. The purpose of a CDFI is not simply to make loans. The purpose is to create economic opportunities. At Clearinghouse CDFI, this mission is central to every financing decision we make. Why do CDFIs exist? To understand why CDFIs exist, it helps to understand the financing gap many borrowers face. Traditional lenders often operate within strict credit boxes designed to manage risk through standardization. While that approach works well for many transactions, some worthwhile projects fall outside those conventional guidelines. For example, deeply affordable housing, developments, community facilities, rural projects, tribal community investments, nonprofit organizations, special needs housing, faith-based institutions, and emerging community revitalization projects. These projects often create tremendous public benefit, but may require a lender willing to take more of a comprehensive view of the risk and impact. CDFIs were created to help bridge that gap, and we evaluate opportunities not only based on financial performance, but also on the positive outcomes they create within communities. Our role is to work collaboratively with borrowers to understand the complete picture. Rather than focusing solely on what makes a project different, we evaluate borrower strength, project feasibility, community need, long-term sustainability, and economic impact. This solution-oriented approach allows us to responsibly finance projects that produce meaningful outcomes while maintaining sound underwriting standards. We are not lowering standards, we're expanding opportunity and access to capital. Next slide, please. Our impact since 1996. Yes, we have been here making an imprint since 1996. As a mission-driven lender, impact measurement is a critical part of our work. Every loan we make is evaluated not only for financial performance, but also for the positive outcomes it generates. Examples of the impact matrix that we track include affordable housing units created, preserved, or rehabilitated, jobs created or retained, small businesses supported, healthcare services expanded, community facilities financed, individuals and families served, investment directly into underserved communities. These measurements help us ensure that our capital is producing tangible benefits beyond the balance sheet. Impact measurement also creates accountability. It allows us to evaluate whether we are fulfilling our mission and creating lasting value within communities we serve. Clearinghouse CDFI is a nationwide direct lender who retains servicing for all of our loans. With more than 30 years of experience servicing communities that are often overlooked by conventional financing sources. We work directly with borrowers, developers, nonprofits, community organizations, and commercial real estate professionals to provide financing solutions that create meaningful impact. Now, 60% of our capital is designated for CDFI eligible projects, and 40% of our capital is available to projects outside of the CDFI criteria, but still in alignment with our mission. We are, we are a direct lender and we take a relationship-based approach. Our focus is understanding both the financial viability of a project and the broader community benefit it creates. Many lenders start with a reason to decline a deal. Our process starts by asking, is there a responsible way to make this work? Can we find a win-win path forward? Since our inception, Clearinghouse CDFI has deployed has deployed more than 2.8 billion in cumulative lending. That capital has financed more than 2,700 projects, created and preserved nearly 14,000 affordable housing units, supported more than 45,000 jobs, and positively impact millions of individuals nationwide. And we have closed loans in 36 states. These outcomes demonstrate what can happen when responsible lending is combined with a mission-driven approach. At Clearinghouse CDFI, every loan represents more than a transaction. It represents families finding housing, businesses creating jobs, healthcare providers expanding services, and again, communities building a stronger future. That commitment to measurable impact is what drives our work every day and aligns closely with the values reflected in both the CDFI industry and the B Corporation movement. Next slide, please. Thank you. I must emphasize again our clear differentiator. We are not a hard money lender. A hard money lender is focused strictly on asset liquidation value, charging double-digit rates with short-term charging double-digit rates with short-term high-risk exit horizons. In contrast, as a certified B Corp and direct lender, our pricing is risk-adjusted, sustainable, and structured to ensure the long-term solvency of the borrower, thereby protecting our senior debt position and generating stable, predictable loan portfolios. We strive for flexibility in our loan creation process. Our goal is to accommodate the unique needs and circumstances of each client. That means each loan is individually underwritten. We take solutions-oriented approach, and clients enjoy direct access to a full team from inquiry to post-closing. When you work with Clearinghouse CDFI, you're not routed through a call center or handed off to someone who has never read your file. You have direct access to people making decisions. Your business development officer, your loan administrator, and your underwriter. That transparency accelerates the process and builds trust on both sides. We do not run deals through an automated scoring model. Every project that comes to us is evaluated by an experienced underwriter who takes the time to understand the specific merits, complexities, and community context of that deal. Your project is not being compared to a template. It's being understood on its own terms. That is the Clearinghouse difference, and it is why borrowers who work with us tend to come back. Next slide, please. Now let's talk about what we finance, both in terms of loan purpose and the broader categories of community lending we support. We can structure loans for the following purposes: acquisition, purchasing a property; refinance, replacing existing debt with more appropriate or favorable terms; renovations, rehabilitating or improving an existing property, bridge loans, short-term loans to support projects through stabilization, and construction, ground-up development, or substantial rehabilitation. One of the key advantages of our construction loans, which I'll point out now and we'll discuss a little bit more later, is that our construction loan program does not require a double close. Once the property has been stabilized, we can seamlessly transition the loan into a permanent financing, saving both time and closing cost. We organize our lending across 8 community loan categories: community facilities, affordable housing, commercial real estate, new markets, tax credits, small business with commercial real estate, Indian country, rural lending, and opportunity zones. If your project touches any of those categories and any of these loan purposes, it is worth a conversation with our team. Next slide, please. Thank you. Beyond the loan categories, here are the specific property and property types that make up our portfolio. This gives you a clear picture of the range of deals we work with: charter schools, affordable multifamily housing, some traditional apartments, special needs housing, churches, religious institutions, healthcare facilities, small business with commercial real estate, office, retail, nonprofits, mobile home parks, industrial, and mixed-use properties. If you're looking at this list and thinking your project might fit, it very likely does. And even if it's not on this list but creates meaningful impact, we want to hear about it. In the spirit of transparency, let me also share what falls outside of our guidelines, because knowing these upfront saves time for everyone. So we typically do not lend on startups or offer working capital, loans under 1 million, vacant land or fix and flips, agriculture, cannabis, or gas stations and car washes, single-family homes that are owner-occupied or investment, Airbnb or short-term rental properties, or non-flagged hotels, as well as self-storage facilities, and we typically do not offer line of credit. And a note for geography: while we are a nationwide lender, our primary target markets are Arizona, California, Nevada, New Mexico, Oregon, Texas, Washington, and Indian country. We have made loans in 36 states, so please do not let geography stop you from reaching out to us. Now let's talk through our current loan terms. I want to take a moment to kind of go through each column so you have a clear, practical picture of what to expect. Please note these are general terms and each project is reviewed on a case-by-case basis. However, if these rates and terms are somewhat in alignment, we recommend submitting your project. Loan amounts range from $1 million to $15 million across all 3 lending categories: multifamily, commercial real estate, and construction. For multifamily loans, we offer terms up to 15 years with an amortization up to 35 years. Interest rates start as low as 7.5. And I just want to express again, this rate is typically geared towards deeply impactful housing. Payments are principal and interest. Maximum loan to value is 80%. The minimum debt service coverage ratio is a 1.15. And we hold first lien position and never second. And prepayment penalties apply for up to the first 5 years. Going over to commercial real estate secured commercial lending. For our commercial real estate loans, terms run up to 15 years with an amortization up to 30 years and rates starting as low as 8%. We can structure payments as principal and interest only, or as a bridge loan, depending on the needs of the project. Prepayment penalty on long-term loans applies during years 1 through 5. The DSCR, minimum DSCR is 1.15. And for deeply impactful projects, again, that 1.15 is typically offered to deeply impactful projects. We typically want to see the projects at a 1.25. But again, don't let that keep you from submitting the project to us. Again, we hold first lien and never second. Now on our construction lending, for construction loans, terms can run up to 36 months with a rate as low as 9%. Payments are drawn from an interest reserve. Maximum LTV is 80%. There is no prepayment penalty on construction loans. A few important notes before we go on to the next slide. Interest rates vary on a case-by-case basis based on risk profile, project type, borrower strength, community impact, and these rates are our starting points. Cost for appraisals, application fees, third-party reports, and preliminary legal work are discussed after an initial project review and are always reasonable. Also, please note we do not charge an upfront processing fee like most lenders these days. Our construction loans, again, do not require a double close. Once the property is stabilized, we can transfer it into permanent financing. Next is our broker incentive. And I'm sure there are some commercial real estate brokers or professionals on today's call. I want to make sure you guys hear this clearly. For every loan you bring to us that closes, we offer 25 basis points of the total loan amount as a referral fee. This is our way of recognizing and compensating for the important role brokers play in connecting borrowers with the capital they need. The referral fee is paid directly to you from Clearinghouse CDFI at close of escrow. In addition to this, you are eligible to determine your fee for your borrower. We will only need a signed agreement between you and the borrower to collect your fee at the close of escrow. If you have a client who could benefit from CDFI financing, affordable housing, developers, nonprofits, healthcare providers, faith-based organizations, small business owners with CRE, we want to be a resource for you. And we want to make it worth your while to think of us first. We respect relationships you bring to us. In the event we are unable to fund a request, we will not refer your borrower to another broker or financial institution. Your client remains your client. In the event of a duplicate submission, we honor a first come, first served policy. Submission protection remains in effect for 6 months from the date of last contact or file activity. The original submitting party will be protected, and we will promptly notify all parties of the duplicate so everyone has clarity. We believe great partnerships are built on trust, and these commitments are a reflection of that. Now, we are getting into the heart of today's presentation. I want to walk you through our 5-step loan process from beginning to end. Having a clear picture of this roadmap will help you prepare better submissions, set accurate expectations on timeline, and move through the process more efficiently. The 5 steps are: step 1, project discussion, submit your request, discuss borrower needs, and preliminary terms. Step 2, letter of interest, execute the LOI, submit the complete loan package, and provide your good faith deposit. Step 3 is underwriting. The loan is underwritten and presented to loan committee for approval if necessary. Step 4, closing and funding. Our closing department gathers all necessary documentation and finalizes the funding. Step 5 is post-closing. We stay in close contact to maintain a positive and productive relationship. Let's go through each step in detail. Okay, step 1 is the initial contact and pre-qualification stage. To get started, you can visit clearinghousecdfi.com. You'll click on Borrower and select Ask a Loan Question. Then you will follow the prompts to provide your initial project information. I will be your point of contact for all new inquiries, and typically I will respond within 1 business day. This stage is intentionally informal. We are not asking for a complete loan package. We simply want enough information to have a meaningful conversation about whether this is a fit. That includes the property type, location, loan purpose, loan amount requested, a brief project description, and some context on the borrower. If it is a project we want to explore further, I will follow up with an email requesting additional information. Once that is received, your file will be assigned to one of our business development officers who will reach out to discuss the potential letter of interest. If the project is not a good fit, I will send you a clear prompt response explaining why. Now, I would like to take a moment to highlight our business development team, and I'll introduce them further at the end of this presentation. They do have a combined 40+ years of experience, and they are solution-oriented and committed to giving every client an honest and timely response. One key point I want to emphasize, the sooner and more clearly you share your project details, the more efficiently we can move the file to closing. We recommend submitting opportunities approximately 90 days before their close date. And once a term sheet is signed, the closing process typically takes about 45 to 60 days. Um, Please note, signing the LOI in step two, which we'll go over a little bit more in step two, does not mean the loan is approved and the terms are set in stone. The loan must still go through a full underwriting process and will not be submitted to underwriting until a full package is received. So please communicate this early with your borrowers. Once a project clears the initial review, we issue a letter of interest, or LOI. The LOI outlines the proposed loan terms and conditions. It is our formal expression of interest in financing the project. And again, I want to be very clear about what the LOI is and what it is not. Signing the LOI does not mean the loan is approved. The loan must still go through full underwriting. The LOI establishes a framework, a starting point for the detailed work that follows. When the borrower agrees to the terms and signs the LOI, they must also submit the complete loan package. This package typically includes financial statements, tax returns, rent rolls, or lease agreements, a property description, organizational and ownership documents, sources and uses, and a project narrative. Your business development officer and your loan administrator will provide a detailed checklist. At this LOI stage, a loan administrator will also be assigned to your file and becomes your primary point of contact throughout the process. They will manage the due diligence checklist, that provide your access to our secure borrower portal for document submission, and keep communication clear and consistent. The borrower will also provide a good faith deposit at this stage. This deposit is used to fund third-party reports, primarily the appraisal, property condition assessment, and environmental reports if necessary. These reports are critical inputs for underwriting, and they typically take 2 to 6 weeks to complete. Prompt payment of the good faith deposit is important because those timelines start when reports are ordered, not when the deposit is received. So once the good faith deposit is received and all due diligence items have been submitted, the loan will move then to underwriting. When with the complete package in hand and third-party reports underway, the file moves into underwriting, our formal credit analysis stage. At this stage, the underwriter begins the credit analysis. Our underwriter reviews everything: financial performance, property value, borrower creditworthiness, debt service coverage, loan to value, project feasibility, community impact, and any risk factors specific to this deal. As I mentioned earlier, every loan at Clearinghouse CDFI is individually underwritten. There is not an automated model making these decisions. During underwriting, there may be several calls involving the underwriter, the loan administrator, the borrower, the broker, the business development officer, uh, or the business development officer, excuse me. It is important for the borrower to respond promptly to the loan administrator's request. The faster outstanding items are addressed, the faster the loan can move toward approval. Once all due diligence items and third-party reports are received and underwriting is complete, the loan is submitted for approval. Depending on the loan amount and transaction complexity, the loan will either be reviewed by our loan committee or approved internally by our credit team. If the loan is approved, a commitment letter is issued outlining the final loan terms, conditions, and covenants. The commitment letter is sent to the borrower for signature. Any final due diligence items or conditions are identified and collected. Once the signed commitment letter and all final items are received, the loan documents are sent for signature and we move into closing. Now, this is the step everyone has been working toward: closing and funding. Our closing department gathers all necessary documentation and finalizes the funding. That means coordinating loan document preparation, title, escrow, insurance verification, attorney engagement where required, and any municipal or governmental approvals that are part of the transaction. The loan administrator coordinates with the borrower to send loan documents for signature. Once fully executed, and once title and escrow confirm they're ready, the loan is then funded. After funding, our loan servicing team becomes your primary point of contact for the life of the loan. They handle payment processing, covenant monitoring, and any ongoing reporting requirements. Our servicing team understands the context of mission-driven lending and is committed to being reliable, responsible partner throughout. Now, in the final step isn't really an ending. It really is the beginning of an ongoing relationship. We will stay in close contact to maintain a positive, productive relationship. At Clearinghouse CDFI, we don't close a loan and disappear. We believe in the projects we finance and we want to see them succeed. That means being available, being responsive, and being a genuine long-term partner, not just a transaction processor. Many of our borrowers return to us for future financing precisely because of the experience they had from the first conversation through post-closing. That kind of relationship is the highest compliment we can receive, and it is the model we are committed to. The process has 5 steps, but the relationship does not end at step 5. That is really, truly where the relationship begins. Now, I would like to introduce Annie Norwood. She is the Director of Loan Production, and she will share a few real-life examples from our portfolio.
Thank you, Stacy. Hello. I wanted to share just a small sampling of recent transactions here at Clearinghouse CDFI to give you a sense of our range and what we can offer. For starters, if you look on the left side, there's 2 affordable housing deals. The first one is in Rock Springs, Wyoming. This was a very large existing affordable housing deal. There's about 300 units in this deal. The property had become quite dilapidated, so there was a lot of deferred maintenance. Many of the units were not livable, and we were able to help the owner come in, acquire the property, and also rehabilitate it to bring 30 of the units back online and create the quality of life for these residents. This property serves individuals earning less than 50% AMI, so it's a very impactful project. Next is another affordable housing project. This is an ED1 development in Los Angeles. This was a ground-up construction loan, so we were able to provide ground-up construction loan that seamlessly converts into a permanent loan for this affordable housing project. This project serves individuals earning less than 80% AMI in the Los Angeles area. Next is a sports facility that we lent on. We did a number of these loans in 2025. This specific one helped a youth facility in Northbrook, Illinois. We were able to help them refinance their existing debt and also take some cash out to complete some expansion efforts for their youth facilities on site. I believe it was about 100,000 square feet of space that they were able to complete. So it was also a very impactful project. On the top right, you'll see a hotel deal we did in Rock Hill, South Carolina. This was the hospitality anchor of a pretty cool project. It was a industrial reuse mixed use development. So they basically took an industrial site and were able to repurpose it into a mixed use master planned community. This hotel was near completion of construction, and we were able to help them complete construction, get it into a more stable financing structure for the project, and help stabilize the hospitality anchor of this development. Next was an owner-occupied small business loan. This is in Union City, New Jersey. It was a diagnostic clinic that had been in the community for over 30 years. We were able to help them refinance out of higher interest rate debt and get them into a long-term facility to help stabilize the operation of this clinic. The next example here is an assisted living facility. This one was fairly straightforward for us. It was just the acquisition of an assisted living facility focused on memory care services. It served residents or private pay and Medicaid residents in the local community. Last but certainly not least, we do a lot of loans to religious institutions. This loan was to a church in Norwalk, California. It was this church was unique in the sense that they had a preschool and a charter school on site. So we were able to help them refinance into a more stable debt structure, long-term debt structure, to help stabilize the overall operation of this church and the schools on site And the school served lower income populations. So it was a very impactful project as well. As you can see, we provide financing across a broad range of asset types, loan purposes, and transaction sizes, giving us the flexibility to support a variety of community-focused projects. If you have any questions about these specific transactions, or if you have a deal that may have a similar profile, we'd welcome the opportunity to connect and discuss it further. Thank you.
Wonderful. Thank you, Annie, for expounding on these. So 7 deals, 7 communities, 7 different kinds of impact. That is the range of what we do and why mission-driven lending really matters. So in closing, I want to close by coming back also again to something I said at the very beginning. At Clearinghouse CDFI, we believe financing should create opportunity, not just returns, not just transactions, real opportunity for families, for businesses, for communities that have too often been overlooked by conventional capital. We've been doing this work since 1996, and we have deployed more than $2.8 billion. We've touched more than 5.2 million lives, and we have helped fund over 2,700 projects and supported more than 45,000 jobs. And we're still here, we're still growing, and we're still looking for the next project we can help make real. If you have a deal that fits or even one you're not sure about, please reach out. We would rather have an early conversation than miss an opportunity to do something meaningful together. Our business development team is ready to hear from you. Annie Norwood, she's the director of loan production, and myself, Stacy Davis, commercial real estate production associate. And then our business development officers, Lawrence, Lisa, and Brian. You can reach us by phone at 800-445-2142 or visit us online at clearinghousecdfi.com. Submit a new project at any time through the link on our website, and you will typically hear from us within 1 business day. And now we will open up for any additional questions. Were there any questions in the chat that we want to answer
Yes,
verbally?
I'm gonna have to defer to Annie on this one. So somebody asked when you were sharing about the projects, can you share how much match funding was required for these projects, and if you required the developer to have secured other funding before accessing the loan?
How much match funding? So I don't know if this is referring to cash equity into the deal. We do like to see the borrower come in with some cash equity, typically around 20% on all deals. Sometimes that can come down to 10 to 15, depending on the capital stack. So I'd be happy to talk about it specifically, but we do like to have the borrower come in with some cash equity, and then if there's other layers of financing, we are comfortable with those types of structures. I don't know if that answers the question. If it didn't, feel free to throw in another question.
Okay, and then I had one more for you, Annie. What about Greenhouse for providing food and food deserts as a business within a senior housing community?
Yes, I saw that question. That is really unique. It sounds really impactful. So I would love to learn more about that if you could reach out to us and talk about it. I have not personally done a greenhouse project like that. But if it was tied to a senior living facility, I think there's a way we could perhaps get comfortable with it. So I would love to learn more. That's definitely not something we shy away from. Here at Clearinghouse, you'll learn, the more complex, the more kind of we get interested. Sometimes we're not scared by something that's a little bit more unusual. So I definitely would encourage you to reach out to us, and I'd be happy to discuss it further.
Yes, we have a question from Joyce.
Yep.
Joyce, you want to go ahead and ask your question? Joyce, you're on mute.
If it's easier, Joyce, you can type it into the Q&A at the bottom. Oh, attendees don't have the audio function, Trisha.
Okay. Joyce, if you can type it into the Q&A, then I will be happy to, they'll be happy to answer your question for sure.
Is there a minimum credit score threshold for a general partner of the fund?
I can answer that if you'd like.
Yeah.
We don't have a hard and fast minimum. If your credit score comes in lower than we'd like to see, or if something pops up on your credit report, we are just going to want a letter of explanation, and then we'll consider it on a case-by-case basis, depending on what we find on that credit report and your explanation.
All right. Do we have any other questions out there? You can type them into the chat if you, or the Q&A section. One of the questions was, what is the time frame from beginning to close? And how do I track progress? We typically, a loan will typically take anywhere between 45 to 90 days. It can take longer in specific situations if it's a construction deal, if it's more complicated, if there's a city involved, or if there's multiple attorneys involved, that typically makes things take longer. If you guys are really on top of getting us your loan documentation when we request it, that we can get it done a lot quicker. You know, that we do have to wait. Appraisals sometimes take anywhere from 2 to 5 weeks, depending on the complexity of the transaction. So just keep that in mind as well. Okay, can we use EB5 funds as equity? Annie, do you know the answer to that one?
I'm not familiar with the EB5 program, so
Yes.
Chris,
I'm going to jump in. Yes,
yeah, jump in, Chris.
we can use EB5 funds towards the equity, but it cannot completely replace borrower cash equity. But we can use it, and we have in the past.
Great. All right. Here's another one for Christine and Annie. When running DSCR calculations, what are your NOI parameters and / definition?
So we would, so we look at it on a case-by-case basis. Our underwriting team would review the NOI, make sure it meets our underwriting criteria. And then I would say like the range of debt service coverage requirement would be depending on the deal type and the risks of the project. So the asset type, the stabilization of the project, all of those sort. There's a bunch of components that we would consider when reviewing that. So, but I would say our definition of NOI would be pretty standard compared to what other lenders would require as well.
Okay, if I want to talk to you about my dreamed about project, what all should I get together as far as documentation before contacting you about my idea?
Stacey, do you want to answer this? You're the one you first contact.
Yeah.
If not, I'm happy to take it.
Right. I missed the question. I'm sorry. Can you repeat the question?
Sure. I want to talk to you about my dream project. What should I get together documentation wise before contacting you about my idea?
Your dream project. So depends on what stage you're at in your business. If you're just starting out, then we probably wouldn't be a good fit for you because we require ours. If it is an LLC corporation to be at least operating for 2 years, and for
Stacey, you're breaking up a little bit. Yeah.
back now.
Yes. It's a little better now.
Of course, the computer wants to wait till the end to start
Yeah.
acting. But it depends on where you're at in your business. If it's a startup and you have less than 2 years of operation, then I would recommend waiting until till you have reached that 2 year, because we're going to want to have some financial documents such as your tax returns, your P&Ls, your balance sheets, things of that nature, and we want to see 2 years history of that. So it kind of just depends where you're at. If you're at the very beginning, again, we want to hear about 2 years about it.
And just to piggyback off that, thank you, Stacy. For construction loans, you want to be about 90 days out from close. So if you're constructing a new project, we want you to have, plans and specs and really be pretty far along in the project before we are going to issue a term sheet, because we really need to be almost shovel ready on that deal in order to bring it to underwriting. Because the first step of our process, as Stacy discussed, is ordering an appraisal. And in order to order an appraisal, we need plans, specs, we need a construction budget, we need a general contract on board. So the project does need to be pretty far along. We do have a checklist. We're happy to share it.
Yes. Okay, next is what is the index rate and buffer rate, or what index rate and buffer rate is used for setting interest rates? Can we get a fixed interest rate? Our interest rates are fixed. They're locked a 2 weeks before funding. Or we use the 10-year treasury. It depends on the type of loan, but we use the 10-year treasury for non-construction loans, and I believe we use, correct me if I'm wrong, the Wall Street Journal for the construction loans.
Yeah, I can speak to it a little bit more. For affordable housing, our rate right now, our rates change. So just keep that in mind. I would always encourage you to reach out to us for the most recent rate. But currently, our rate for affordable housing will be based off or all of our perm loans are based off the 10-year treasury. So for affordable housing, it'd be 10-year treasury or 10-year treasury plus a 3% margin with a floor of 7.75%. If it's market rate housing or something a little bit less impactful, that rate would bump up a little bit with a 3.5% margin, up with an 8% floor, somewhere in that range, plus or minus, 25 basis points. For other commercial, our rate would be around the 10-year treasury plus 4%, so closer to 8.5% on the floor. We sometimes can come down on that for other commercial if it's a highly impactful project. And then as Melissa said, our construction rate is based off Wall Street Journal Prime plus 2 to 2.5. Our rates are generally right around 9% plus or minus 25 basis points for construction. But as mentioned, those rates do change frequently. So I would definitely encourage you to reach out for the most recent rates.
All right, somebody's let's see. Can APRA funds be used as partial equity?
Ooh, Chrissy, I don't
know what that. Yeah, me neither.
I'm not
I'm
familiar.
not familiar with that as well. I'm assuming it's some kind of a government grant or I don't know. Let me look it up and see.
Fiscal Recovery Fund.
I would just say that we are very solutions oriented, so we're always open to talking about it. We would just need to get comfortable with that source of funds. We still would want the borrower to come in with some equity, like we typically want 20%. Perhaps if we get comfortable with that and it's a highly impactful project, we can bring that down to like 15%, maybe 10%. I don't know. It would really depend on the specifics of the deal, but we're always open to discussing.
Does Clearinghouse CDFI do construction loans for rehabbing mixed use buildings?
Yes.
Yes, we do. And then do we fund tribal entities?
Yes, we do. We love doing tribal loans. So we would love to do more.
Yes. And just FYI, those loans are the ones that typically take a little bit longer because there's always attorneys involved. So just keep that in mind.
And we've done a lot of them, so we have a lot of experience
Yes.
in that area.
Yeah, our attorneys are very experienced in those types of deals. Okay, I would appreciate the checklist as well. We can get that sent out to you after this call. All right, I am not seeing any other questions. Anybody else have anything else they want to ask while we're here?
They're great questions.
Will the presentation be available? Yes, we will be sending this out to everybody that signed up.
And if any other questions pop up, feel free to reach out to us directly.
Yes.
and
Yeah.
we'd be happy to answer any other questions.
Yeah, and I put the link in the chat. I put the link to where you could submit any projects that you want us to take a look at. We ask that everybody go through the website to submit that information, and then Stacy will reach out once we get that from you guys.
And then we have
And
a
if you,
poll here of some questions that you should see a pop up. So again, we want to encourage you to answer those. And if there are no further questions,
oh, hold on.
When just
When do we, who do we reach out to with questions? Stacy, do you want to share your info?
yes. So I know this was a lot of information, and if you find that you have questions after this event, please feel free to contact me directly at stacyd@ccdfi.com, or you can reach me by phone as well, 949-540-7363. If somebody doesn't mind kindly dropping that in the chat.
And it just did that.
Thank you for that. Or I can, let me go, I have to move something to do it.
All right. Yep.
Okay.
So Stacey's contact information was just put in the Q&A as an answer to that question. So
Wonderful. So again, if there are no further questions, again, thank you all so much for joining us today and sharing your time with us today. We look forward to collaborating with you all in the near future. Enjoy the rest of your day. Thank you.